Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Green is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome to the Private Equities Profits Podcast. I'm Cliff Locks, your host, and with me today is Marcus Magarian, Managing Director at Chatsworth Securities, LLC. Marcus brings more than expertise in technology and data analysis experience to the investment banking industry. Marcus works with multinational corporations in origination and placing capital for private equity, feeder funds, and private placements between the US, EU, and Latin America for real estate, energy, oil and gas, infrastructure, and corporate interests. Marcus, welcome. Please share with the audience a little of your backstory.
Hi, Cliff. Good afternoon. Thanks for having me here. The pleasure. I've been watching a lot of your previous interviews, so very excited to be here. I'm a native New Yorker. Been here all my life. Started out working at my dad's store in the Times Square area. Got my first job at derivatives at Morgan Stanley, Merrill Lynch. After that, then business school. We opened a Brazilian bank in New York and London, doing natural resources, private placements. When that whole thing died off, I was lucky enough to get a job at a tech company doing UX analytics for about 3 to 4 years. And coming back into banking, we've been focusing quite heavily in things in the payment space, analytics space, everything involving data, which is we like to call the new oil.
Very true. How does the data analysis of customers' behavior in e-commerce drive investment advice?
The most important thing about data is that it's free, and it's so telling. I always like to tell my customers or prospects, it's kind of like if you have people in a focus group, it's like, you like Coke or do you like Pepsi? And then give us your advice. The first person that speaks, they'll say, I like Pepsi or they like Coke. It'll influence everybody in the room. And what happens with data is that it's completely naked. You know exactly what the people are really thinking without, ever having to ask them. An example of this was when we were working with Electrolux. I told them, I was like, hey, 99.98% of your customers don't know how to buy an air conditioning system. And they had no idea why. It's because the most important thing is that the data told me that this was the case. So we were able to change things, increase their sales about 100 times. I mean, it was easy when you have hardly any sales. But using those skills today, you could basically go to any company and say, okay, you have 1 million people going to your site. Let's say your average order value is $100. You have about a 2% conversion ratio. So I'll do $100 times 20,000. So you make $2 million. From there, we want to know exactly what their goal is. Are they looking to buy a company, sell a company, expand, buy market share, et cetera, et cetera. So
very good.
It's very telling. And it's a way to advise clients without having to ask them questions.
Can you give us examples of what the data points you consider in pricing derivatives? With
derivatives, the one thing I love about derivatives is that it's very similar to analytics. So back in 2000, when I started working at Morgan Stanley, derivatives were priced kind of like just taking market data. It's the same way you would take through a Google Analytics or some kind of analytics capturing tool. And you want to know volatility, you want to know exactly what the buzz is on the stocks, or some kind of technical analysis. And today you have I use those skills from the derivatives days in order to price companies, because everything with digital companies is dependent on data flows. And so it's kind of the example I gave before. You have a person that comes into a site. I know how the traffic is behaving, but the most important thing I have to know is, where is that traffic coming from? So if I'm selling fishing equipment and I'm bringing my traffic from the Wall Street Journal, my sales won't be as good as if I drove it from another site that was where the person came into the site thinking about fishing equipment. And it's the same thing with, so everything with data, it's how do you manipulate the data, which is really the individuals that are going into your website or to your app, the same way that people engage in the stock market.
I'm excited. You're going into a forensic analysis on those companies that you're looking to help raise funding at this point, but really understanding what drives revenue and the sources of that traffic. It's critical at this point for sustainable sales. What trends are you seeing in an e-commerce space that affect your investment strategy?
Right now with COVID, actually, I have a group out of the UK that I'm a board member of here in New York. It's a retail group. And what we're trying to do now is take possession of stores on Bleecker Street and make it into a COVID store. So it's important because everything we're doing in e-commerce, everything is becoming more omni-channel. So what does a store look like in the future with COVID? Visa put out a report saying that you had 60% of people were paying by phone, or the stores had the ability to pay by phone. Now it's like 85%. And everything is digitally transforming to this contactless payment world and all these things that didn't exist before. So what you've really had is a really massive acceleration in that market. The digital world, online shopping, has really converted over into the brick and mortar side. Amazon was way ahead of this when they had the thing where you could go into a store, which, there's more to it, but you go into a store, you could only go in if you have a phone. It's a problem if you don't have a phone. I'm surprised no one's saying anything about discrimination, but if I go into the store, I could walk out without even talking to a cash register person or paying or pulling out a credit card or anything like that. And the concept that we're trying to do is saying, okay, 70% or 60% of stores on Bleecker Street are empty. There's all these things happening with moratoriums. Landlords aren't getting their rent monies, and because no one's walking. You have to stay home because of social distancing and all those things. Let's take stores and do virtual fitting rooms and fulfillment centers and no inventories or items in stores, and make it like an e-commerce store, but with a physical presence. But when you have all that information, you're collecting the data on your customers coming to the store. The way this used to be done when we were, much younger, you used to see guys in the corner of the streets tapping on these little metal things. And what those guys were doing was counting the foot traffic going left to right. Nowadays, you don't need any of that. Everything is digitally tracked. You carry a mobile device, the beacon captures everything. So in business school, I went to business school in France. So we obviously did the Louis Vuitton case study. When somebody walks into the Louis Vuitton store on Champs-Élysées, the likelihood is that a Westerner will turn left. So they put their most expensive and most popular items there, like women's handbags, the ones that you see, whatever. Men's stuff was to the right. And all the way in the back right was smaller handbags, which were more popular for Asian communities. And so they took an old way of doing a method, which today everyone can do because it's very expensive to have someone sit there and click all day. And you also have to understand that the data probably won't be accurate if someone's clicking themselves manually versus a computer collecting all these things. So
how has COVID-19 impacted your investor-advisor relationship dynamics with clients?
We've gone from less private placements to more M&A.
Okay.
And I prefer M&A versus, it's harder to do because everything, it's like a marriage. Because the thing is that a private placement, most people will accept 10%, 20% of a company. There are those that want more than 50%, but because of the acceleration that we saw from those things like the Visa reports or contactless payments or how people are using more digital means, there's so many players that are completely out of the market now. They have no choice but to consolidate. And so right now it's a rush because it's we're focusing very heavily in the payment space. A lot of our European clients, what's happening is that they know that they're having some kind of adverse event happening. But then you have companies like, Toast is a bad example, but a company called Lightspeed, they've raised so much money. They go in and they just buy out markets and they'll overpay. They'll pay massive multiples. And we're seeing a lot of those things and the problem with that is that if these companies don't sell, because raising capital, forget about it. Because it's just, they're not gonna be able to be fast enough. This other company, they buy one player, they'll have 10,000 stores or 5,000 stores installed in there with their technology, and then they'll just start cannibalizing market share, kind of like that escargot thing that that Walmart did when they first opened and started expanding through the United States. Right now, we're seeing massive land grabs happen, and it's the Luddite players that either have to move or they're going to be out of business soon. And there are many people that we speak to who know that because of COVID, you had this massive jump in technology that they know that they have to move somehow. It's either going to sell the company or they get integrated into another company, and we do like a stock swap kind of thing.
Mm-hmm.
And that's really been the play.
But really, you have to disrupt yourself at this point.
Look, when I was an engineering student in college, and like I didn't touch coding for a long time, but I will not go into a deal if I go into a deal, I never ask for a pitch deck. I think it's a waste of time because it's just marketing puff. And having worked at the problem with working at a tech company when you come from an investment bank is that you have FINRA. So everything has to be transparent, clear, and all these things.
How does data analysis work in determining the risk or predicting ROI?
It really, with data or with a website, it's all about your goal. And it has to be very clear. Like if you take a company like WeChat, they do everything. In the United States, WeChat wouldn't really work. It's the closest thing you have is like Facebook or like an Amazon, which is not really, it's still pretty specific. When you work with data analysis, the first thing you want to know is what the purpose of the data is for. So like if you're capturing data from like a pharmaceutical company versus a cosmetic company, the purpose of the data changes significantly. And this goes back to a point that I was trying to bring up before, is that an investment banker today really has to understand database language. So I don't ask for presentations. What I ask for is schemas. And I want to know what data you're capturing and how you're capturing it. Because many times when you'll speak with a company that's like in the healthcare space, they say they want to do something with analytics. Great. Are you allowed to get that data? The answer is no. So then you cannot do anything with that data, nor will you capture any of that information.
It's interesting because we've had some conversations with an organization called Burst IQ. So it's the blockchain, HIPAA compliant. And then I'm working with a team, I'm on their board, and we're using an activity band. Something you and I would wear, like an iWatch, from Apple at this point. And that data is being uploaded to the blockchain, permission granted by the user at this point. And then we're putting analytics against that. And then there's a chat bot that goes back to the individual to try to motivate them to be more active. And then we'll actually reward that individual with tokenization, meaning similar to a cryptocurrency, to be more active. And then they can convert the crypto to buy organic food products in our Shopify store. So it's an ecosystem, but it's really about the wellness of the individual that is our customer at this point, utilizing the app. So
like one thing that you mentioned I love is the tokenization technology, because it prevents credit card fraud. It's a way where you basically say, I want to do a payment, but instead of sending the credit card information, you send a token. It's like those little grasshoppers you used to get back in the day. It's like you want to log into your email from a random country, you had to use the token, despite having to know your username and password.
Yeah, technology is accelerating, and the cost to actually build something is decreased substantially, which is somewhat of an equalizer. But you need brilliant people like yourself, Marcus, to step in and analyze, do we really have a market at this point? Is it addressable? Is it going to be vibrant? Do they have the ability to pay? What's the vision of the future look like? What's the vision of success? And then work it backwards at this point. It's got to be profitable. It's got to iterate. It's got to be fun. You got to have a really strong team around, when you're building it out. It's not just engineers. You need the business. You and I had a conversation there, that the CEOs really need the vision. Plus, they got to be able to run a business and allow the company to flourish. And the engineers are really more on the product side and the seamless and the user interfaces. It's an exciting period of time. That's the way I look at it at this point, is we're digitalizing pretty much everything we're touching at this point.
Yeah. But I think because of where we are in the market today, this is why now you're just seeing massive consolidation, or you're seeing companies that received way too much cash trying to go public. I haven't seen as many IPOs since my days, Merrill Lynch, where they're having like 1 to 5 IPOs a day almost, or every week. That was they were just throwing them out. And what was interesting is that like the reason why I find it interesting is because there's an index called the Wilshire 5000.
Sure.
And it used to have in 1997, 7,500 stocks on the market. USA Today, a couple of years ago, came out with an article saying like today that 7,500 stocks is now 3,500 stocks. So it's less than half, or at least it's around half, a little more than half. It's telling because what does it say? The IPO or the publicly traded company doesn't have the same value as it did before. So what does that mean? We had the credit crisis in 2008. You had the mortgage-backed security, and those things were put into one piece of paper, securitized, and you had, let's say, 1 million mortgages. You broke it up into millions of pieces and sent it to a bunch of pension funds in Scandinavia, Europe, Asia. Today, if you want to manage those MBSs, there's a tech company which will cover every single thing for you using analytical data. So you'll buy the mortgages individually and you say, I want specifically these kinds of mortgages. So you no longer have to buy these prepackaged mortgage-backed security things. And the way it works is you go to like a bankrate.com. I need a mortgage. You put the mortgage. They sell the lead to a loan provider. The loan provider is like Cross River Bank, and their job is to structure the mortgage, provide the capital. In 3 months, they'll resell that to a hedge fund. But the hedge fund obviously needs to track it using this technology, which a friend of mine actually was one of the founders for. It's a company called PeerIQ. And they, and so then you could track every single thing individually, but because the computer's doing it and they have a very homogeneous way of looking at it, the computer just has to track everything over and over and over again. Did you pay? Did you not pay? Foreclosures, what are the risk profiles? And you customize it.
Strong analytical tool in the right hands.
Yeah. And it's like you invent a dishwasher so you could wash your dishes. And that gives you the opportunity cost to do something else. It's like hiring a secretary or, getting a car to get you to point A to point B faster, or you're using a plane to go to another country.
Describe the culture and the philosophy of your firm.
Well, we are a firm that's been around for over 30 years. It's got a lot of great people. It started out really as a big IPO shop. And over the course of time, it's obviously been transforming to now we're doing tech deals, starting to become very successful at it. And the great thing is that you have a lot of people that are very willing to grow. And it's interesting because a lot of the players come from very top-end Ivy League schools. They were founders of divisions at Goldman Sachs, worked at UBS, worked at family offices like the Qatari Family Fund, and a lot of very intelligent people. But the opportunity today is taking that knowledge and transforming it to something more digital. For the younger generation at Chatsworth, what we're trying to do, make it younger. And so like the great thing is that they're very open to it. We've been successful at it. I don't know, it's very exciting. I could tell you it's better than having a 9-to-5 job at a bulge bracket bank, because you have to have a group of people that are open to going next steps.
Describe your approach to helping companies structure their corporate direction, growth strategy, and preparing them for long-term and capital stack.
A lot of the times today, on top of all those things that we do, is a lot of times CEOs are looking at things at a very granular level. They only see their company's day-to-day problems, like problems that we will never know. And a lot of times it takes months or weeks to fully understand what a company is going through, because people lie, CEOs exaggerate, they're afraid, there's a performance factor. And the CEO, as we said before, he's the number one sales guy at your company. So he's selling, even if he's not supposed to sell to me, because my job is to be the buffer for him with investors or buyers. Nowadays, it's, as we mentioned before, it's all about acquisition. For you to be a company, looking to do a startup and do some new idea, et cetera, it's a little more challenging today during the age of COVID, unless you're doing something that's very COVID linked, but will have continuity after that. A lot of times we've had opportunities where we're working with the CEO. One CEO for 10 years was paying over 20% cost of debt. I'm like, how do you survive? You're selling airplanes. And when I looked at the balance sheet, I started noticing they were putting things like on their current ratio, or the current liabilities, making the current ratio going on like 1.7 or something. And what happened was I was like, well, no one's going to give you a loan because you look like you have terrible books. When we restructured the entire balance sheet, we got, current ratio of like 4.5, which is ridiculous because you're basically, you're destroying the value of your company. Got them a loan right away. After 10 years, we cut the cost of the debt from 20 something percent, like 22%, down to like 9, 10, depending on what the line of credit was. And it was all because of format. And it was the reason was we had to get rid of the bookkeeper or the accountant, hire a new one, restructure the thing, cleaned it up.
That's millions of dollars worth of savings there.
Oh my God, it was crazy. And getting too specific on who the company is. They were not an American company, I'll tell you that. They were operating out of the United States.
What do you love about what you do, and what do you find most rewarding personally?
At a place like Chatsworth, it's kind of like a sandbox. You have a lot of free reign to do what you want. It's very important that we focus on a very specific sector. So we're very focused on things like in the payment space, which payments means everything. It starts with payments because it's credit card processing, which became digital banking, which became things like digitizing things like Western Union, and things like analytics companies, which is just data flows, all about the law of large numbers. Solving those puzzles for those CEOs is the best. The hardest part is getting past that barrier where like you can't tell the client that they're doing something wrong. You have to give them the idea for them to come up with the idea and then solve the problem. But usually it's something that it becomes a difficult thing for people in the positions of power, is that you have to do things in a way that makes it seem like we've transformed, we're doing things very successfully, and we've been successful at it. We've been transforming those things, and it's a lot of fun.
So it's really a partnership between you and the client at that point.
Oh, 100%.
Okay.
100%. And the clients usually don't understand, like in the beginning, they'll have an idea of how things are supposed to be done. When they actually go through it, it's like I've had my last deal, we had an issue with the lawyer. If the lawyer comes, once we pass the deal to the lawyer, it becomes no longer our deal. We have to be polite to the lawyer, making sure whatever. And then you have to make sure the lawyer has experience. I've had 3 or 4 deals where like they hired the wrong kind of lawyer, or they mixed the one lawyer to do something else. So simple things like, registering things with the Department of State to transfer the share, who the ownership of the shares, or declare the transfer of owner shares to the state. Lawyers not knowing how to do that because they've never done it before, or lawyers creating adverse things in order to increase billable hours, or sometimes before everything is happening, the client starts getting worried about things like fees. And I'm always telling them, it's like, you haven't even sold the company yet. So you have a long, long, long way to go. Then there's the issue like clients, the buyer could go away, and then there's a lot of massaging. So it's very complicated.
So you got to hold the deal together. That's really what you're talking about.
Together.
And
but you have to make it seem seamless.
Very positive. I've had the privilege of building 3 companies and selling them. And really, it's people like yourself and your fine organization that allows these deals to get done.
Yeah.
There's a lot of emotion involved in it, especially for the entrepreneur.
Yeah.
And it's a privilege to work with professionals, and deals get done. That's the exciting part. What will be your personal legacy?
My personal legacy, just enjoy it. That's it. The most important thing is not to have an ego in this business. So legacy just got to be, make sure you have a good family, that you pass the education along and move things forward. The culture of everything, I think, has changed significantly. Like, one thing that Chatsworth used to be was a very private bank. The world has gone Facebook and Instagram and TikToks now, and et cetera, et cetera. The way you have to present yourself has changed significantly. Like, try joining a private club. No, we don't have to. You just join Facebook and everything's shared. Private clubs have social media things, putting pictures of their parties and their things like that. So old legacy systems, old legacy social circles have changed significantly.
Marcus, can I share your contact information with our listeners?
Of course.
Marcus Magarian, email is mmagarian@chatsworthgroup.com, which is spelled MMAGARIAN @CHATSWORTH.com. You can reach Marcus by phone at 203-340-2827 at extension 122. Again, that's 203-340-2827, extension 122. Thank you to our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. The show has been produced by Market Domination, LLC.